On April 3rd, Mitsubishi Corporation announced new share buyback plan and dividend increases, along with medium-term management plan 2027, FY 2025, underlying operating cash flow forecast, and shareholder returns. Over the past decade, Mitsubishi's financial performance has been influenced by market fluctuations, particularly changes in resource prices. Despite these external factors, Mitsubishi has demonstrated steady improvement in its earning power, leading to consistent growth in its underlying operating cash flow. This trend reflects the company's ability to adapt to market conditions while strengthening its core business operations. For fiscal year 2025, the period from April 2025 to March 2026, the company expects underlying operating cash flow to be affected by resource price movements. However, due to the expansion of its non-resource businesses, overall cash flow is projected to remain approximately at the same level as in fiscal year 2024. This suggests that the company's diversification strategy is helping to stabilize its cash flow, reducing its dependence on resource-related revenues. In terms of shareholder returns, the company plans to implement an astonishing 1 trillion yen share repurchase program, providing additional value to shareholders by reducing the number of outstanding shares. Additionally, Mitsubishi will increase its annual dividend to 110 yen per share, up from 100 yen in the previous year, reflecting confidence in its financial stability and commitment to returning profits to investors. Overview of Fiscal Year 2025 Share Repurchase Program. Mitsubishi has decided to launch a 1 trillion yen share repurchase program to enhance capital efficiency, in addition to allocating post-returns free cash flow generated previously to shareholder returns. With a strong financial foundation, Mitsubishi will continue to pursue disciplined investments to drive future growth, leveraging cash flows from fiscal year 2025 onward and making strategic use of financial leverage when appropriate. As part of the 1 trillion yen share repurchase, 230 billion yen will be conducted through a tender offer at the price of 2,291 yen from April 4th, 2025 to May 2025. Tender offer is when a company offers to buy shares of another company's stock directly at a specific stock price. This approach was chosen in response to certain corporate shareholders expressing intent to sell, particularly in the context of cross-shareholder relationships. The move aligns with the company's ongoing efforts to strengthen corporate governance by addressing potential cross-shareholding sales in a structured and transparent manner. Mitsubishi plans to conduct the rest of 770 billion yen in share buybacks at market price, excluding the 230 billion yen allocated for the tender offer from the total 1 trillion yen repurchase program. These market-based share repurchases will take place between May 7th, 2025 and March 31st, 2026. Overall, the 1 trillion yen buyback program represents up to surprisingly 17% of the company's total outstanding shares, reflecting a significant effort to enhance shareholder value and improve capital efficiency. Corporate Strategy 2027. To drive both growth and efficiency, Mitsubishi is targeting an average annual growth rate of 10% or more in underlying operating cash flow, while aiming to achieve a ROE, return on equity of 12% or higher by fiscal year 2027. And Mitsubishi will maintain net DE ratio, net debt to equity ratio below the upper limit of approximately 0.6 to ensure financial stability. While preserving a strong balance sheet, it will strategically use financial leverage to support select investment opportunities. Additionally, Mitsubishi remains committed to progressive dividend growth and will continue to execute flexible share buybacks to enhance shareholder value. Capital allocation strategy. Over the 3-year period of this management strategy, from fiscal year 2025 to fiscal year 2027, Mitsubishi plans to allocate approximately 1 trillion for sustaining capital expenditures to maintain and enhance existing operations. Additionally, it will invest more than 3 trillion yen in growth initiatives to drive long-term expansion. This decision will be based on its investment pipeline and other strategic factors, considering whether to direct the surplus toward additional investments or increased shareholder returns. Mitsubishi plans to continue investing to expand its business. This is the Japanese yen base chart for the last 6 months. After the US President Donald Trump announced new tariffs, and many Japanese stock prices dropped sharply. The Nikkei 225 index declined as investors feared a slowdown in global trade. However, Mitsubishi's stock price is stable compared to other companies, due in part to the announcement of increased dividends and share buybacks. Current dividend yield is almost 4%, and if calculated the dividend yield at 110 yen after the increase, it comes to about 4.3%, which is not a bad dividend yield even at the current price of 2,542 yen.